All right, welcome back everybody. My name is Pratesh here with KAIZN Crypto, bringing you guys another video. So here today we're going to be taking a look at Charles Hoskinson explaining how Cardano could get to $1 trillion market cap. So my thoughts on that and putting it all into perspective. So we're going to be taking a look at this infographic as well, showing asset classes and how they compare with each other in regards to market cap. And then lastly, taking a look here at Central Bank Digital Currencies. So I actually found this on BIS.org. The Bank of International Settlements is the central bank of central banks. So how are they addressing this issue as we go forward with these digital currencies? So all of that is here in this video, so stay tuned. All right, everyone, I hope you are doing well. Today is Monday, April 27th of 2020. Thank you guys so much for tuning into this video here today. What I wanted to bring you guys, so recently Charles Hoskinson has been talking a lot about some things happening with crypto, especially with Cardano. We're seeing lots of developments happening with the project. In a recent interview, so he was explaining why he believes that Cardano could potentially hit $1 trillion market cap. So now this article is going to be on Cointelegraph. I found a couple of key points here, just some quotes that I thought were interesting. So quote from Charles, he's saying, so my whole argument for academic rigor is that it's not just about today, it's about tomorrow in two different respects. It's about tomorrow from the respect that we can get protocols that can scale to billions of users, and there are no protocols in the world that right now allow us to do that. So they have to be designed. And then two, who will come up with the protocols 5 years from now, 10 years from now, 15 years from now? So yes, I agree with that. I feel like, what we have now, we essentially have, we've got central banks specifically for individual countries respectively, and all of these central banks are issuing their own fiat currencies. So the idea behind the blockchain and that it is distributed amongst an entire network that could be global, it's borderless, that is to me probably going to be one of the most revolutionary things about this entire space. And what Cardano is doing is they're building a decentralized infrastructure that not only allows the user to be in control of their funds, but also in the future, once we see smart contracts, allows you to interact with other members on the network using these smart contracts to be able to gain and provide value. So it's an incredible thing that they're building here. Also talking about scaling, so how they intend to bring this to billions of users. Talking about quantum computers. So again, he quotes, when quantum computers come alive, we have defenses against that. When we start doing these things on satellites, we have protocols for that. Well, what we want to see is these things work on a cell phone with the same user experience and use recursive snarks. And it doesn't have to be built by one company or one party. It can come out of the academic world in a very decentralized way. So I think this is the long-term superior approach, and it's the only approach that will actually get us to the protocol of 1 billion people. Yes, Cardano, fully open sourced. Anybody can read the source code, can edit it. It's going to be amazing to see how many people are currently involved now and where we're intending to go over the next few years. Now, in terms of getting to $1 trillion market cap, so first key point here is that everybody under the age of 35, if you take a cross-section of them, statistically speaking from McKinsey, and these other people are more likely to own a cryptocurrency than own a bond, a stock, or gold. So investor interest in these asset classes is biased towards the young, and as the young get older, they get richer. Eventually, states will run their voting systems. Eventually, states will operate their property registrations, all these things. So the fact that those systems exist and they're doing all these things creates more inflow of value. And third, the regulations are getting set that institutional investors can finally put money into our industry, which brings billions of dollars of new investment. Yes, absolutely. Where we're going currently, we can see things like Bakkt, there's Fidelity, there's all these institutional custodial services now being brought on for cryptocurrencies. So yeah, and then talking about the demographics as well, we're seeing baby boomers who are now unfortunately having to sell their assets in terms of stocks and bonds in a very turbulent time. As far as the value of these assets, I think that there's going to be a big disparity in what they were hoping to retire on versus their actual value in the marketplace. And what we see with cryptocurrency, it's an emerging technology. So the ability to increase in value is that much greater, being that, think about in the instance that you were to be an early investor in a company like Apple or Amazon or Google. I think that's exactly where we're at now in the life cycle of cryptocurrencies. So yeah, I think that Charles Hoskinson made quite a few valid points here in this article. I think $1 trillion market cap is definitely not out of the question. It's just a matter of when. So let me know what you guys think about that. I would love to hear from you. Leave your comments down in the comment section below. And piggybacking off of the idea of a market cap, so I found this infographic on Bitcoin Magazine's website. I'll link to it down in the description below if you guys want to check it out. I think it does a great job of showing a visual representation of where capital is allocated here throughout the world. These numbers are, they could change. Bitcoin market cap goes up and down. So the way they've got it set up right now is that in this visual, each block represents $180 billion. Bitcoin represents one of those blocks. So comparing that to the grand scheme of things, still a very, very small market size. If you look at a company like Facebook, they're at 2.8 blocks. So what is that? Maybe like 400 billion? I don't know, something like that. You guys just, take the numbers with a grain of salt. But, just to show you, as far as all the capital that is allocated within these companies, these are large blue chip tech companies. Total assets of the Federal Reserve. We can see even gold. Gold is a huge market cap relative to that of Bitcoin. And if you think about Cardano is not even close to this. One block being 180 billion. Cardano's sitting at a market cap of $1 billion. So we are in the infantile stages of the project. But I don't think that it's out of the realm of possibility. And if we see here, global real estate market is massive. We can just keep scrolling. And we see global debt. If you take a look at the global debt, is just insanely big. So market capitalization is definitely something to, it's a very arbitrary number, but I feel like there is price potential and room to grow in terms of cryptocurrencies. And last bit I wanted to leave you guys with here today. So doing some more research on central bank digital currencies, I think the concept is being very highly debated now that we're seeing things like Bitcoin come to light. It's definitely something that has gained mainstream media attention and awareness. And now these central banks are at a point now where they're scrambling because they are, we saw with Facebook's Libra coin, it really kind of put things into light as to what these central banks do, which is essentially control the money supply, and how they have the potential to lose that control to things like distributed ledger technology with Bitcoin, and even corporatized versions of that with things like Facebook's Libra. Now, this visual, I think, does a great job of sectioning off different assets. Here we can see that they've got what's called the money flower, taxonomy of money. So all of these different categories here, we can see where does cryptocurrencies, I guess something like Bitcoin or Cardano kind of fit into it. I would say private digital tokens for general purpose would be somewhere around here. And, that goes in a very similar quadrant as that of cash. So, something like Bitcoin or another decentralized crypto such as Cardano, we talk about Cardano a lot, would be very similar to something like that of cash. And then we see here central bank digital tokens. So now we know that central bank digital tokens are digital. They're all within this quadrant here. But the thing with the central bank digital tokens is that they are central bank issued. So similar to that of cash, the difference here is that what they're trying to do is abolish cash. They want to move away from cash. And the reason is because they can't track it. That is why I think that this technology in the hands of central banks is something that could potentially be very dangerous. For central banks to be able to have the ability to digitally track your expenses and transactions, which they do currently in a way. If you think about it, you have your bank account. They could freeze your bank account with a snap of a finger. It could be very easy for them to do. So this technology used for good, I feel like could foster a lot of innovation and prosperity for developing countries, individuals who have not had the access to banking previously. However, I feel like with these central bank digital currencies, it could be something that we see is very detrimental to the sovereignty and the freedom and really the prosperity of people in general. So let me know what you guys think about all of that. I would love to know your thoughts on that. What do you guys think about central bank digital currencies? Are they going to catch on? Are they just going to get replaced by something like Bitcoin? Let me know down in the comment section below. All right, everyone, I really hope that you found some value from this video here today, and I will see you guys in the next video. Take care.